Welcome back to Ferocious Education. This is Zed. Today we're going to be talking once more about Paysafe, going with the ticker PSFE. Today I wanted to cover this update as this week it really plunged down to around 40% lower, and we want to discuss quickly a bit of their earnings and what that all means in terms of their upcoming operations. So let's jump right into this one. If you've never heard about Paysafe, they are a leading specialized payment platform, and they basically announced the third quarter 2021 results in depth in November 11th, 2021. And so the first things, the financial highlights. So the total payment volume is around $31.1 billion, which was an increase of around 19%. Revenues was around $353.6 million, which is a decrease of 1%. And net loss attributable to the company is around $147.2 million, compared to a net loss of around $38.1 million, and an inclusive of non-cash impairment charges of $322.2 million. So there is a bit of a worst case or a bit of a bad news here with the net loss. It really doubled up compared to last year or year over year. Adjusted EBITDA is currently $106.4 million, which is a decrease of around 1%. And they gave a revised outlook for the full year of 2021. So first off here, let's dive into the presentation instead of going on towards there. So first, key messages is that the third quarter adjusted EBITDA was with guidance despite softer revenues. And they continued the execution strategy across Paysafe strategy, which is winning in North America iGaming and other high growth verticals, for instance, cryptocurrency, and delivering on cost and tech platform targets. Now, the digital wallet was weaker than expected, addressing performance challenges and repositioning for long-term success. This was the biggest bad news about digital wallets. And as a result, they're resetting their 2021 and 2022 financial outlooks. Now, I'm not going to sugarcoat anything. I'm trying to be here as basically as non-biased as I can be. So the expectations back in August 16th, 2021. So they directed marketing verticals improvements in the second half of 2021. Continued execution on cost saving. Strong pipeline in e-commerce processing expectations on onboarding new clients for fourth quarter of 2021. And the third quarter guidance and full year guidance was third quarter guidance was $360 million to $375 million in revenue, adjusted EBITDA between $95 and $110 million, and maintained a full year of 2021 outlook. So what we're seeing here in terms of today, they have direct marketing recovering as expected for quarter over quarter, delivering around $26 million in cost saving year to date. Although the second half of quarter three weaker than expected, with weakness continuing to quarter four, and challenges are basically towards a digital wallet that appears to be somewhat of a flop. And the third quarter results and full year outlooks, they were below guidance on revenue, specifically $6 million lower on the low side of the guidance. The adjusted EBITDA was there closer to the upper side though for their guidance. Now, they lowered the full year 2021 guidance and full year 2022 guidance mainly towards the digital wallet turnaround. So the digital wallet performance is weaker than expected. So for Springs, the fundamentals improving with cleaner portfolio as a result of earlier exits and restrictions on networks saw good indicators of lapping legacy issues. Summer, quiet European sports betting activity expected soft quarter three, followed by improvement in quarter four. Leadership transition with digital wallets division between July and September. Now, late summer and early fall, even weaker than expected, and further softening in Europe, primarily regulations related to, for instance, Germany and Netherlands, and actions taken to review and revise pricing tiering to better align with the market. You're able to see here performance versus prior expectations. So you're seeing the current expectations is more of a drop in the quarter revenue for digital wallets. So that's not a good thing. You're seeing a downtrend. Prior expectations was an uptrend. So that was a major reason for the reaction of the drop of 40%. Now, their overall performance for full year of 2021 estimated versus 2021 actual, you're able to see that it's actually dropped down today. For 2021, you're seeing $355 million for digital wallet revenue. In 2021, actual was $395. So there's definitely massive drop as a result of this lower than expectation seen. So they really dropped their guidance down. Now, taking action to reset digital wallets. So action to reposition long-term success. So 1, network issue lap for short-term. Now, improvement to customer experience and pricing changes, exit non-performing product features, and right-size the organization and clean up the balance sheet. In terms of the midterm, strengthen relationships with top-tier merchants, continue the growth in Skrill USA, and expand crypto capabilities and partnerships. Now, headwinds. Continued market softens and regulations in Europe, and low 2021 exit rate. So there is some challenges with one of their main products, digital wallets, and that is definitely seen when shareholders are reacting with an exit. So there is a bunch of things, for instance, in terms of guidance. They didn't meet the gross profits, neither were revenues, but they met the adjusted EBITDA. And we're able to see in terms of volumes, you've seen higher volumes year over year, but in terms of revenues, lower revenues year over year. Adjusted EBITDA was 1% lower than the year before. So all in all, you're able to see a very stagnant, if not a drop trend. Now, the summary of the eCash segment here, you're able to see higher volumes, higher revenues, and higher adjusted EBITDA. But again, the main part is the digital wallet segment, has seen a drop of around 17% across the board in volumes and adjusted EBITDA. In terms of the integrated processing segment, has seen a nice increase in terms of total revenue and volume. However, in the adjusted EBITDA, you've seen a drop of around 7% lower. So all in all, you're able to see that their cash and cash equivalent is around 262 million. However, their total debt is around $2.169 billion, giving them a net debt of around almost $1.91 billion. And you're seeing here a net debt to LTM adjusted EBITDA is around 4.4 times. Now they have a commitment to reach 3.5, but we'll see how that goes. In terms of the 2021 full year updated guidance, currently showing a revenue of around 1.5 billion to around 1.47 to 1.48 billion compared to 1.53 and 1.55 billion. Their adjusted EBITDA also decreased by around 29%, around 480 to 495 million. Now it's 425 to 435 million. The quarter 4 guidance as well decreased down to 355 to 365 million. Their adjusted EBITDA between 90 and 100 million. Now that is lower than expected before, but in terms of 2022 expectations, we're able to see they've given revenues between 1.53 and 1.58 billion dollars. Now, in terms of the prior year for 2021 guidance, it was 1.53 to 1.55, so it's very similar that they're giving for 2022. Adjusted EBITDA between 440 and 460 million. So that's between the prior and the current expectations for 2021 guidance. Now, this is as a result of eCash moderating, increasing, direct marketing recovery increasing, and integrated processing increasing. However, we see a digital wallet reset decreasing the adjusted guidance. Now, before moving on towards technical analysis, there is some good news on institutional buyers. We see adding and basically disposition of some shares. Fidelity owns 50 million shares of this company. That's a massive share that was shown on the 12th of November, just on Friday. We're seeing Inlet, Private Wealth increase the position by 73%, and Bank of New York Mellon Core added 41% of the position. Ferocious Financials initiated a position, and you get to see some of these major companies have added some of these positions, including Magnetar Financial adding 500,000 and Group 1 Trading adding 288,000 and Senvest 150,000, all on the 12th of November. Now, before moving on forward to technical analysis, if you would like to see more contents like this, make sure to click the subscribe button on the bottom right corner and leave notifications on for this channel. Also, don't forget to drop a like if you've actually enjoyed this video. You can join our Discord if you would like to chat with some of the people on there. Let's move on now towards technical analysis. Now, from a technical analysis perspective, we're seeing a few things here and there. First off, the moving averages have been bearish for a while. You're able to see 30 EMAs above 10 SMA, and that hasn't really changed much. Now, from another perspective is the William percent R. This has been in a matter of oversold in a while. So this kind of overselling activity, there's been a lot more supply than demand previously, and this really escalated with that news. It really dropped almost 50% if you think about it, from 801 to 411. That was a significant drop within 2 business days. Now, in terms of the MACD, this is obviously shown with a 40% drop as a very strong negative trend. It's a really strong movement in terms of the negative side, a really massive drop. Momentum is negative, around negative 2.86. Really shows that this one has struggled quite a bit to recover on the next trading session. Now, in terms of stochastic fast and stochastic slow, both are suggesting this might be an interesting time to buy, but it's because it dropped significantly, and that's how these indicators follow. In terms of volumes here, we're able to see volumes have peaked on the 11th of November and then really still higher than normal, but really cooled down on the next day on Friday. Now, this is one of the highest volumes it ever seen before, and it really shows that their bets on digital wallets was quite significant for the shareholders. And once they've seen that there's a decrease on there and it's no longer as relevant to their overall growth, a lot of people just kind of start backtracking, and investors are starting to reevaluate their position in this company. Now, in terms of Fibonacci retracements, we're able to see the first significant resistance into this one is a 683, 852, 988, 1124, and 1318, and the support sits at 411. Now, on a price line action, we're able to see a very strong resistance at the 691, then 736, and then 803, going up to 855, and then 938. Going to 1016, around 1094, 1150, going higher to around 1206, 1277, 1337, and 1408. The support is mainly at 411. There is a smaller resistance to 456 and 501, but mainly the support is only kind of a couple of points, 434 and 411. Now it comes to the question to Ed, what do you think about this one? Well, first, from an analyst rating point of view, a lot of them have downgraded it to around 4 to 450. So there's Bank of America Securities gave it $6, Wolf Research gave it 450 with a downgrade of a hold, and reiterated by Timothy Chideo from Credit Suisse $4 and Everscore ISI $4 downgraded. So currently the average price target remains around 831, which is an upside of 64.67. But the last kind of basically ratings have been mainly between $4 and $6. Now the current price is $4.50, very close to that $4. Now, what do I think about this one? Well, they had a lot of betting against with the digital wallet. And with that kind of being a bit of a flop, a lot of people have seen it as a massive reason to exit this and diversify their portfolio from this stock. Now, the silver lining is you have to see whether, it dropped around 50% discount. You have to see whether this is worth at least half the value it did, even though digital wallets might not grow significantly. And there are other sectors, are they going to see a massive growth or not? If you believe in other sectors other than digital wallet, then this might be a really good buy. But if you don't, and you think that this one is going to really struggle, especially with the stock itself and how it's trading and that kind of thing, then you might just want to leave the stock alone. Now, in terms of momentum and volume and a bounce back, this is a very hard thing to say. Now, of course, you might see some people pumping and dumping it at this level and going in and pushing the stock further, but the end point comes in is a drop because of a really important aspect with digital wallet rather than a short report or something that might not be true. This is factual things. So you got to be very careful in investments. What do you think is going to happen here? Make sure to down in the comments below. Share, subscribe, and like, and have a wonderful day. Now, if you're still here on this video, make sure to drop down below and join our Discord. We have a lot of different things going on, including, for instance, members that gives picks for free. It's not pump and dumps, we just things we think about, swings, etc. We also have really exciting bots. You can actually use those ones. For instance, we're just testing out this bot, for instance, that gives you Fibonacci resistance points, activities, etc. And we have a bunch of free things, totally free. We run on tips here, and you can ask me questions, suggest stocks, etc. It's a really nice community that has been growing up very fast at a very good rate, and it's totally free. If you would like to join that one, feel free to do so in the description below, and have a wonderful day.